Welcome to Project Accounting in Microsoft Dynamics SL 2015. My name is Kim Bateson. I have experience in implementing and setting up Dynamics SL, as well as training and supporting. My background is 15 years of using project as well as financials and payroll modules within SL. In this course, we will study Module 1, Project Controller, Module 2, Project Budgeting and Analyzer, Module 3, Time and Expense, Module 4, Allocator, and Module 5 will be Flexible Billings. Our target audience are new users who are not familiar with Microsoft Dynamics SL project modules, and also new customers who are wanting to learn more about the product. Also, it will be helpful if you have a basic understanding with Dynamics SL financial modules, as well as understanding of project terminology. Let's start with Module 1, Project Controller. In this module, we have an overview of the overall project modules and how they interact, as well as discuss processes, setup, and entry screens within that module. As an overview, we'll review the process workflow as well as the source of costs on your projects. We're also going to review some sample data related to a specific time and materials project and review the monthly processes that you'll practice once you start using the product. And also we'll get a better understanding of how the chart of accounts and account categories interact. When we think of projects, we think of there's multiple things that will happen related to data coming into projects. So Project Controller typically is not a module where we enter data, but it receives data from a lot of other modules. So if we look here, we'll see that there are data coming from General Ledger, accounts payable, receivables, payroll, inventory and purchasing, as well as time cards and expense reports. Once it's processed in those original modules, then many times we want to allocate or bill the data. So we need to create transactions from those costs to generate billing records. Specifically, we can get fees, indirect costs, as well as we can also reclassify costs in the Allocator module. Once we've created transactions in Allocator, then we also can generate invoice lines. And these invoice lines will be handled through the Flexible Billings module. And then once the draft invoice has been created, then we actually will post the invoice and create a record in Accounts Receivable and General Ledger. When we think of data related to project, one of the things we have to keep in mind is we need to think about billing records and cost records. So as we go through the processes, I will try to identify when I'm talking about costs and when I'm talking about billings. Specifically, we can have costs from different locations. Regardless of the type of project, we'll have costs from different locations. But in this example for the time and materials project, we're going to study 4 different types of costs. Specifically, we'll have a materials example, we'll have a direct labor example, where we have units, and those units will be billed at a billing rate, and we'll have subcontracts, as well as travel expense. So at the end of the data workflow, we'll have costs of $21.50 on the project, but we'll have a billing of $55.50. Here's an example of where you might have costs originate from. So regardless of the type of project, we will typically have many of these type of costs associated to a job. Where are they going to come from? So if we have a labor cost, most often that will come from a time card. It could also come from a payroll entry, but most generally would come from a time card. We also will have subcontracts, and those subcontracts will likely come from AP vouchers. However, we do have customers who desire for their subcontracts to enter time cards, which would allow them to bill those subcontracts more quickly than you would if you're waiting on an invoice from a vendor. We also would have materials or other direct costs. Typically, these would come through a purchase order or an AP voucher. We can also have travel costs, which would generate from an expense report or through an AP voucher as well. And then we could have travel time that would also come from a time card. The first example we want to look at is material costs. So going through, we're going to use the same exact workflow that we looked at before, where we went through each module and identify, as it goes through that module, what transactions will happen. So when we go through these, will be two different types of records. We'll focus on both the GL posting and the project posting. So project is a sub-module of general ledger, and within the project, we can track profit and loss on that project. Whereas in general ledger, we're tracking project or profit and loss at a company level. We want to track that same profit and loss at a job level. So that's what project is going to offer us when we review the data. So here's an example of how a material cost will work through that workflow we described before. So we have a process of the AP document, and the it will create a merchandise purchase record to account 4030 in general ledger, and it'll go to AP account 2050 for $500. But also, at the same time, we'll get a project posting to an account called materials. That will be the cost piece on the project side. In order to bill that, then we would want to bring that record through allocator. We want to mark that up at 10%. So allocator will run and we'll create a record to unbilled AR and unbilled revenue most often. And it's going to mark it up to be $550. We also get the same project postings to unbilled AR, unbilled revenue. Then when it flows over to the invoice, we'll see the materials show up on the invoice at $550. We don't get any postings at that time. It's just generating an invoice that we can create to send to the customer. And then the invoice, once we're happy with it, we would post it, and we get an AR document for the $550. But we also would get some postings to general ledger and to project. So we get the AR record and the revenue record, but we'd also clear out of those temporary unbilled accounts as well. We get those same identical postings on the project side. So now we want to also look at a labor example. In a labor example, you're going to see a lot of the same information. The only difference is that how are we going to bill it? So instead of marking it up 10%, we're going to bill it times a billing rate per hour. So we'll start with our same content. We'll have labor posted to a specific GL account, and we'll also see labor on the project for $800. That's how much our cost is, because they're $40, 40 units, and they make $20 an hour. But we want to bill that at $100 an hour. So now allocator is going to be used to apply the billing rate of $100 an hour rather than marking up at a 10%. So we'll get the same postings we saw on the materials, except now we'll get it for $4,000 instead of the $550 we saw before. We'll again bring that over to flexible billings, and then we'll also generate an invoice for the total amount. Okay. Now, just because I'm showing these examples doesn't mean actually the materials and the labor can be billed together, but I want to show you the workflow all the way through from start to finish. Another example that we can have is subcontracts. This is identical to labor in the fact that we're billing off of units. So we have a cost of $600 that was entered in AP, along with the 10 units that we received on the invoice from the vendor. However, now we're going to bill at $75 an hour rather than $100 an hour. Allocator is so powerful that it allows you to choose your billing rates. And those billing rates can vary by the type of account, the type of work, the project, the task. We have a lot of choices on how we can identify the billing rates. Then we'll generate an invoice for the subcontract piece, and then also do the flexible billings posting at the time that the invoice is created. Same counts are cleared as we saw before. The final example that we will look at is travel expense. So the travel expense is a little different in the fact that oftentimes with travel, we do not want to mark up travel. It's a pass-through cost. So we can also have pass-through costs that we can just bill at the same amount that it cost us. We wouldn't want to do that all the time, or the company wouldn't make any money. But there are specific accounts that are important to have as pass-through. So this is an example of a pass-through cost. So travel, our cost is $250, and it will come from an expense report. Allocator, it will still go through allocator, but we can direct allocator such that it will not mark it up or apply any additional billing rate to it. So we'll see the $250 flow through, again, to our unbilled AR and unbilled revenue, flow over to the invoice. It can be displayed as travel, or we can show more details if we want, and that will be covered in the invoice module. And then, again, we'll generate the invoice. I want to show the entry screens for a couple of these so you get an idea in Dynamics of how that would show as a source record. So we'll go to project or voucher and adjustment, and here you'll see this is an example of the material cost. So when I have, here's the account that's assigned at the time that the voucher is entered, and it's associated to a project, and you'll see the $500 as cost. So that 4030 account will flow to GL, but it also will generate a material cost on the project. In the same batch, I've created the subcontract costs. So this is an example that would go to account 4090, also flowing to the same project for 60 units, but the price is $600. So we're paying that vendor $10 an hour. So that's the source of both the materials and the subcontract. However, we also want to look at where your labor would be coming from. So the labor would come from a time card. So this is my time card. Again, I'm putting it to my project. My account is identified as 4050, and when we cover the project, the time and expense module, we'll cover how those costs accounts are determined, and then we'll see that there's 40 hours on this time card, equaling for $8 per 8 hours per day. So in this post, it will generate a cost of, and this timesheet with rate and amount is nice because we can see the cost in here as well. So this is a different view of the same screen, but I see my 8 hours, and the cost rate is $20 per hour, so the extended amount is $800. So that's how much that cost will come up with when the time card is posted. Then the last source of records is the travel, and the travel is going to come from the travel and expense report, which we'll cover later as well. This happens to be for mileage, same project, but I'm going to have 500 miles, and the rate comes through at $50 or 50 cents a mile. So my actual cost is $250. So this is the workflow that will happen to generate each one of those records. Now let's work through the monthly processes of what needs to be done to process a transaction through the database. So we've already talked about that we create financial transactions in the modules such as GL, AP, and AR. And those, when you think about how a transaction flows, we have data in financials, and we have data in project. We want to bring the data from financials to project. If you think about, you would have a mainland and an island, we would need to have a bridge to bring, to move from one to the other. Well, Dynamics has the same kind of process where we use the bridge of financial transaction transfer to bring it from financials to project. So if you look here, we'll have financial transaction transfer, and that's the process that brings financials over. We also have time cards and expense reports that are already in project, and those do not need to come through financial transaction transfer. This is also called FTT, so if you hear me reference FTT, in the future I'm referencing financial transaction transfer. Then we run allocator, and again, that's the process where we apply billing rates such as marking up 10%, or applying an hourly rate. And then we apply a billing workflow. Once we're through the billing workflow, then we want to make sure our GL balances are correct. So there would be checking your financial statements, making sure your revenue and expenses are categorized correctly, making sure your balance sheet items are correct. Once you have your balances finalized, we can run Indirect Rate Calculator. Now, Indirect Rate Calculator is a process where you can take actuals from your financials and apply those to your project costs. This is most commonly used with direct government contracting, so DCAA reporting. So quite often with a government contracting project, you would have your provisional rates that have been approved by the government, and so those would be the costs that you would apply to your projects throughout the month. But yet we know there's actual costs that occurred that you want to understand your actuals as well. So we can use Indirect Rate Calculator to go and find the financial postings in General Ledger, find what your fringe, overhead, G&A rates are, and then we can apply those to your projects using Indirect Rate Calculator. Not all companies use this, but it is a functionality that's available and works quite well. So we need to use this process last because we don't know our final numbers on General Ledger until your balances are finalized in GL. So once those are finalized, we can apply the actual rates through Indirect Rate Calculator, and then the last step is to close your projects. So let's review back to the source of our transactions, AP, payroll, inventory, and purchasing. And just review this from a graphical perspective. So at the time that all these records are processed, we get the postings to, in this example, merchandise purchases, as well as subcontractor. At the time that the record is processed, it goes to General Ledger. We also, though, need it to go to project. So how does that happen? We have a connection or a relationship that we define called account categories. When you think about an account category, or when you think about how the accounting team tracks their data, accounting understands account 4030, account 4050. Those numbers make sense to them. That's the world that they live in. That's the terminology that makes sense to them. However, accounting is not the only consumer of financial data. So we want the project managers to be able to see and also understand the status of their projects. If they see account 4030 or account 4090, that is not going to make sense to them because those are not the terms that they use or familiar with. So what we allow is the concept of account category. And simply this allows you to identify terms that other consumers would understand. So a project manager would understand labor, materials, subcontract, travel, those types of things. So we allow the project to be reported under those terms rather than the account numbers that you would see on the General Ledger side. So if we look to see how these relationships exist, on the first screenshot on the left side, we'll see the account numbers or the chart of accounts in General Ledger. So 40, 50, and so forth. Then they're associated to what's called an account category, and these are the terms that the project managers would be familiar with. So when it posts to General Ledger, we see account 4050, but when it posts to project, we see the term labor. I want to spend a few minutes looking at these account categories and how they're set up and what they typically look like. So I have account category maintenance, and you'll see there's quite a few in my sample here. We see we can have assets. So the first set are assets, AR trade, unbilled receivables, things like that. We can also have liabilities, which are down here, deferred revenue, deposits, and so forth. We also have expenses, burden, direct labor, materials, and then we also have revenue accounts, which are at the bottom. We also can have account categories that are NA. Now, what's an NA mean? So it means non-accounting. And these are more used to track information that doesn't really show on the project as far as revenue or expenses, but are very important in tracking information for our project. So quite often we want to have a contract value. What's the overall total contract value of this project? So we would want to enter that and be able to track it, but it doesn't mean we want to transact against it, because when we transact our records, we want to put it to revenue, not the contract value. So these non-accounting account categories are very nice because they allow us to track information. Another example of a non-accounting is billed to date. And billed to date allows you to track revenue. Every time an invoice is posted, billed to date is also updated. So we get a posting to revenue and billed to date. So those are two examples of non-accounting. Now we can also see if something is associated to a GL account. So I'm going to open up my labor account category, and here I see that it's associated to 4 different GL accounts. Interestingly enough, you can see that this is a labor expense account category, but it is linked to 4 different GL accounts, 2 of which are assets, and 1 is an expense, or 2 are expenses as well. The reason these are, you can mix and match. You can associate an asset with an expense account on the project side if you want to. This gives you more flexibility in reporting. So when we look at a profit and loss for this project, even though these are assets, we know eventually they will be expenses, so they'll show up on your profit and loss statement for your jobs. Now the thing we have to caution is we would never want to associate a labor to a revenue account, because then we would have inconsistent postings between general ledger and projects. So you have to be careful there. But it's okay to put an asset with an expense, liability with a revenue if you wanted to. Now you'll notice this is grayed out here, so I can't touch this. I can't edit it or modify it. And that's because the only place that you can associate an account category to a GL account is in the chart of accounts. So you'll see if I come over here, the account category column is to the far right, and here's where I link an account to an account category to a GL account. So the idea is that you can have many GL accounts linked to one account category. However, I cannot have more than one account category linked to a GL account. So typically the account category in industry terms, some people use the term cost code. That's typically one of the terms that is used. However, we have broader uses, which I described, such as contract value, build to date, things like that. So it's not just for costs, but that's the most common use of it. Here's an example of account categories, which I just showed you. We can have revenue or sales, cost or labor, costs such as labor and material. We can also track assets like work in process or unbilled AR, or liabilities such as deposits or retention payable. The great thing about account categories is, or the value that account categories bring, is it allows you to charge from any project to one of these cost codes. And then that allows you to track budgets against them, manage your costs, identify when there's problems that occur. You can also monitor your records and see what the balances are, how much costs have been used. So they're great to link with, to associate and use with any project, whether it's an internal project or a project you're going to bill. Now we want to discuss a few other things related to processes. So that we've covered workflow, but now what kind of things can you do in the project controller module specifically? There's not a lot of processes, but there are a few. Specifically, one is financial transaction transfer, also revenue recognition, and project close. We talked about the source of our transactions is from financials, and once we get the account category established, then that's what's going to flow over to projects. So the first screen that we showed related to this, everything went to general ledger. But now we can see through the account category, everything can also flow to project. And so when on the PowerPoints, when you see capital wording such as materials or subcontract, those represent the account category postings. So we got the general ledger postings, but we also encountered or resulted in the materials and subcontract as well. So the financial transaction transfer is the bridge that makes this happen. Now, one of the things that we need to consider with financial transaction transfer is, do you want to have your financials updated every time you process a transaction, or do you want to have control over that and have it less often? So for instance, if I enter an AP voucher and I release that AP voucher, do I want it to immediately update my project costs? Or do I want that to wait until later, and I control when it flows over to project. So financial transaction transfer, or FTT, can be run manually or through a process screen by opening and running it by the user. And so you can control when that occurs. So this might be once a week, once a month, whatever it might be. Or we can automate that, and that's called auto FTT. And if we automate it, what that says is as soon as the AP vouchers are released, immediately that cost shows on my project. And most often our clients use that feature because there's really few reasons that you would want to prevent that from flowing over to the project. Because the faster the project manager can see their costs, the better they're going to be able to manage their projects. So if we look, we can have FTT as a manual process, or we can have it turned on and run automatically. And that I'll show you that checkbox on where that can be set up. We also want to cover on how to close project. And let me show you the project close screen. And it's actually called close period. And this is separate from financial closing. So if you're familiar with Dynamics or using Dynamics currently, you will be familiar with the closing screen on the financials modules. And here we close general ledger, accounts payable, purchasing, AR, so forth. So this is where all these modules are closed or advanced to the next period. But with project, it's not in that list. And so we have a separate project close. And the reason it's separate is there's a lot more thought that needs to go into closing projects. So typically you would close AP the third or fourth day of the month because you want to advance that and you want all new payables to end up in your current period. However, with project, billing's going to happen quite a bit later in the month possibly, and so you want to leave project open for longer than you do AP or AR or even general ledger. So the project closing is done here. The other thing that happens with project closing is there's a lot more that needs to happen with project close. So I'm going to show how this can be closed. So when I run this, you'll notice that it's actually going to give me some messages, and it says, warning, the AP module has not been closed. Do you wish to block the closing? And I can say yes or no. So I'm going to say no, and we're going to let it run through the rest of this. Okay, it went ahead and closed it, but it gave me some warnings, and I want to talk about those warnings. So the first one was AP hasn't been closed. We also get a warning that there's open AP batches. There's time cards that have not been posted. And we also get that there's untransferred AP transactions as well. So let's talk about why would we care about these records, or why is it important that we get these messages? So if you think about the value of project that it gives you is that we want our projects to be as current and accurate as possible. And so if someone has entered a voucher in AP and they haven't released that voucher yet, and that voucher applies to the period that we just closed in project, that voucher will be released in let's say period 5, but project's now in period 6. And so we might miss that cost or transaction on the project side if we were allowed to close project without at least some kind of warning letting us know that AP has a potential record for it. And we'll see that whether it's a batch in GL, AP, AR, those type of things. The other warning we got was that there were time cards unposted. So again, if we have employees who are entering time cards in the period that we're closing and they haven't finished them yet or haven't been processed, we want to know that. We want to be warned of that so that we can go and check and see why haven't they processed them and how is that going to impact my my project costs as well as my billing. So these warnings are intended to give you insight into things that need to still be processed within your data modules. It will, in some instances, it will still allow you to close them because they are warnings. But the nice thing is project will actually let us set the period back and reclose it if we find later that these transactions need to be processed. So let's recap some of the important pieces of project closing. So it's important to close because of the integration of financial modules. So we want to check to see, are there processes or batches that have not been processed on the financial side. Also, it checks to see if there's project charge entries that have not been processed as well. So these are transactions directly within the project controller module that haven't been processed. And it also looks for labor records that have not been processed either. I want to spend a few more minutes on revenue recognition, and that is the last part of this module we're going to cover, but it's an important piece where we can handle revenue recognition. So if you think about the most often the instance where we use revenue recognition is related to fixed price contracts. And fixed price contracts often are billed based on a milestone or a schedule or something like a scheduled billings. But we may not be billing this fixed price contract for another 4 months. Do we want to wait for 4 months before we recognize any revenue on that? Typically not. We would like to recognize the revenue each month as it goes along. So revenue recognition allows us to recognize how far the project is along based on the contract value. So I'm running this in preliminary mode, and this will let us see the results. So you can see all the projects that are set up as % complete. And basically what the process does is it will go through and it'll review the contract value. It'll identify what the % complete is, and then it will determine what the year-to-date revenue is compared to what it's recognized before. If it finds that it has not recognized enough previously, it will generate a transaction to recognize more revenue. If it has over-recognized revenue in the past, it will back out revenue. So it's an ongoing process. Now, how does it determine what it will recognize? The situation is that you would enter your contract value for your fixed price contract, and then you would associate budgets to each type of cost. So my contract value might be $100,000, and my overall budget might be $50,000. Well, if I've only recognized if I only have $5,000 in costs compared to my budgeted cost of $50,000, my project is essentially 10% complete. So what revenue recognition will do, we'll say, okay, I'm 5% or 10% complete on $100,000, so I'm going to recognize $10,000 on this revenue recognition. Let's say the next month the costs have not changed. I'm still $5,000 costs against budgeted of $50,000, but let's say we've negotiated a higher contract price. So now I have $110,000 as my contract value. If I run revenue recognition, it will recognize, okay, I'm 10% complete, 5 into 50, so I need to be at $11,000 for contract compared to the contract. Well, last month we recognized 10, and now we're at 11, so we're going to create a revenue recognition of the difference of 1,000. If the contract value would have decreased, same thing, it would have reduced the revenue. So it's always dynamic compared to your budget versus your actuals versus budget, and then compared to your contract value. We can run this by project, or we can run it across all projects if we want. And notice we also can run it by period. I want to show you also that we can control how this % complete occurs. So if a project is set up as % complete, we have some choices as to how we're going to recognize this revenue. So we'll see the revenue recognition type is % complete, and I can choose to recognize the revenue at the project level or the task level. And we'll talk about tasks a little bit later, but they're essentially activities on the project. So we may want to recognize revenue based on general consulting versus administrative tasks. So we could actually budget at this level, And then we say we want to recognize revenue at this level and change it to the task. So when we do that, when we recognize revenue, it will recognize it at the task level. We can also hard code the percent complete in here as well. So rather than having the system identify how far along the job is, if our project manager tells us this job is 30% complete, we can come in here and we can type 30%, and it will calculate 30% of the contract value and recognize that as revenue. We can also apply fee percent as well. And there's other choices on how we can recognize revenue. So is our budget based on amounts or units? So time and materials, or maybe you're putting in a highway and you have so many miles of road you're putting in, so you would want to say it's based off of units or number of miles that we've completed rather than a certain dollar amount. So that could be like production, based on production. We can also control what it looks at for the cost to determine the percent complete. So we can say all costs, or maybe labor is the main thing, or again, production units. So we have quite a few choices with revenue recognition. We can also set up how that revenue recognition will post. So if I go to Project Controller Setup, I can see on the Revenue Setup tab, we have the contract value. So this is determining when it says the 100,000 that I gave you as an example, when it looks to say how much is the total contract value, it's looking to this account category, and whatever's been budgeted to that account category is used as the contract value. Then when the revenue posts, how do we want it to post? Is it going to post to the revenue account? If we use the deferred, if we use completed contract method instead of percent complete, we can actually have it post to deferred revenue until it's 100% complete, and then it would post it to the revenue account instead. We can also choose if we wanted to go to unbilled revenue or revenue. So there are quite a few choices, and then you may have never seen this before, but these P's mean it's just taking, this is a mask. So it's just saying go find the sub-account that's on the project and post to that. So that way we don't have to hard code a specific sub-account, but instead it could find the sub-account that's unique to that specific project.